Hello, and thank you for tuning in. Today we're going to talk about tax liability simplified. For some reason, there's a huge misconception that if you work, you can't owe taxes. That if you write off all of stuff, not even your own expenses, just zero out your business, that's the way to beat tax liability. There's just so many misconceptions. So we're going to take a quick minute and we're going to talk about tax liability simplified. Who can have tax liability? Anybody, whether you're married, you're single, you're young, you're old, anybody can owe taxes. This is the 2021-22 tax brackets. If you work and they are not taking out enough withholding, you will have tax liability. This is how the liability is determined. As you see, the levels of income, the tax rate increases. If they're withholding but not withholding enough, you will have the balance or the difference, for lack of better words, as a liability. If you have earned income credit, child tax credit, any type of credits, they will reduce your taxable income. If there is enough of them, they may eliminate your tax liability. But if there is not, you will still owe. So as you see, tax liability has a basis and it does apply. So, yes, as an employee with a job, you can still owe taxes. In order to avoid owing taxes, as you grow on your job and you begin to get raises, or if you work multiple jobs, go to irs.gov/paycheck checkup and use their withholding estimator by putting in your current information, and it will tell you how much needs to be taken out so that you don't have a tax liability at the end of the year. Once you have this information, you go to your HR department, your boss, your whoever handles these situations, and update your W 4. Right now is still a good time to do it. It's still early in the year, and you can make sure that by the end of tax season, you do not have a surprise tax liability. It comes with growth. With growth, you grow in how much you make, and that grows in how much they want. So just simply make sure that you're educated and know how to avoid it coming at the end of the year. Now, what about those that are self employed? Who must pay self employment tax? If you earn $400 or more, or if you are a church employee that makes $108.28 to be exact, you are subject to self employment tax. Now, I'm going to stop right there for a second and explain. The self employment tax is not counted into the taxes that we were just talking about. Self employment tax covers your Social Security and your Medicare, the same things they take out on your job. So, what is self employment tax? Self employment tax consists of Social Security and Medicare for individuals that work for themselves. How is it calculated? It is calculated at 12.4% for Social Security and 2.9% for Medicare. A total of 15.3% is calculated and tabulated for self employment tax. So they will take that out. That will be on your Form SE. And still, based on your income, you will have your federal tax rate, which will fall in line with the tax rates we were just looking at and the percentages. So how would you avoid owing taxes at the year if you have a business or are self-employed? You will pay estimated quarterly taxes in an effort to avoid having taxes at the end of the year. Not to be confused with payroll taxes if you have employees, not to be confused with self-employment tax, which covers your Social Security and your Medicare. You would pay estimated quarterly taxes to cover the federal portion of your taxes that you may owe. So while you have your business, when you got your EIN, they should have sent you a letter that explained how to pay in your quarterly taxes. It is 100% possible to have a business and a job and owe taxes from both if you have not regulated your W 4 and if you are not paying in quarterly taxes. Now, some people choose to pay at the end of the year. That's fine. But just be educated and know that if you don't want to get hit with a large tax liability at the end of the year, that doing these two things can help avoid your tax liability. In other discussions, we'll discuss things like SEPs and IRA contributions and things like that that can also help lower. But today on Tax Liability Simplified, I simply want you to understand why and how you end up with tax liability and two main ways to avoid having it in the future. I am Precious Wayne Peaks, owner of Anointed for Prosperity, Bookkeeping, and more. Our goal is to help you help yourself and be knowledgeable in regards to tax issues. If you would need to talk to someone or want to set a consult, you can visit us at www.anointedforprosperity.com. Have an amazing day.